talking to Heath Beam, singularprivatewealth.com online, Singular Private Wealth, the name of the company. Last segment, we kind of divided housing and finance in one segment, then your retirement accounts, the economy, and jobs in another. That's Heath's area of expertise, mine being housing. And how are those two correlated? What you're about to find out, I think, in this interview is an agreement between Heath and I, and this is an unprecedented time of disconnect between those two markets where you're going to see one going way up and one going perhaps way down. I've been in Charleston. Heath's in Charleston. Heath works throughout the Southeast. I'm in Atlanta. Atlanta is a market that kind of goes up, except for the crash. It's gone up very consistently. It's been a very predictable, slow growth market in housing. Well, in the last year, it's been Charleston. I'm like, wow, I haven't seen this since Charleston circa 2005, where people are throwing contracts at sellers. I thought I left that volatility. That was one of the things that made predicting housing in Charleston unattractive. Now we've had it in Atlanta. And to this point that we're discussing, yes, it does. I think I'm hearing a kind of an undercurrent in your answer that you and I are kind of on the same page, perhaps. I'll allow you to correct me if I'm wrong, is that the economy is strong. There's going to be volatility at the top of the stock market mountain where we are in terms of ups and downs. But there's no indicators in your world that the economy is weak, that there's not growth continuing, that interest rates won't continue to go up, making it more attractive for the clients you manage, while at the same time, that's all very positive. Housing could be the one industry that really gets pummeled by all of that because of affordability, increases of supply, and the cost of borrowing money to buy homes, thus driving down prices. At the same time, we have otherwise an economic boom. That is my sense, and I'm not an economist, and I'm not a technician in that regard, but my sense is that that's the environment we're walking into, bad for housing, great for retirement, and overall economy and jobs for some period to come.
Well, you're the expert in that field, Bryan. I don't, so I would defer to you on the housing. I know that in places like Charleston, as long as there is more demand than supply, values are going to continue to go up. Realtors are going to continue to do well. Mortgage bankers and brokers are going to continue to be able to sell money. And the points you make are not. I don't know that they're refutable. I mean, look, the cost of money is rising. One of the biggest challenges that people now, there's a huge initiative here in Charleston for it's affordable housing, and there's another phrase that's been coined about
Atlanta too.
It's the whole, the ability to live anywhere remotely close to where you live, work, and play, and all of that stuff. But I think that what people are going to have to get their heads around moving forward, as we're wrapping up, is that we've just got to understand that we as a nation and economy are not going to grow at the rate that we did for the first 250 years of our existence, because we are in a more mature cycle, all of these things that you hear about, the stock market's returned this and that, and you hear all these numbers for the S&P, and if you put a dollar in the Dow this length of time ago, the reality is that nobody that I know personally anyway has ever been in the market for 100 years.
Yeah.
Right. So, you look at all these 100-year numbers and 50-year numbers and all, that's all great and good. And it's not that it's untrue, but
irrelevant,
it doesn't really mean any. It's irrelevant in the real world, because the reality is the last 20 years, right, from the tech wreck through the global financial crisis of '08 to where we stand today, with all of the recovery we've had and everything, U.S. equities over the last 20 years have returned about 6.75%. When we do an analysis for someone that runs their assets all the way out to the end of their life, which we run out to at least 100 now, the number on a return on their assets that we use is anywhere from 5 to 6.5, depending on how much they want to have at risk in equities versus bonds.
Which is conservative.
Yeah, so I think that we've just got to be very mindful of the fact that you can't just go, oh, well, I'm going to put my money in the S&P and get 10% on average every year for the rest of my life. It doesn't. Truth, it's never really worked that way, and it's really not going to work that way moving forward.
I don't always agree with financial advisors in that respect about that, but that's very profound to say that, because I do remind people that we grew as a country from the 40s to the 70s like mad, and that was the maturing of the United States of America. We're now living in a mature economy. And you are absolutely right that we're just not going to see some of the things that existed in the last 100 years, which, this whole commentary tees up the sales pitch, so to speak, at the end of the interview, which is that's why you need a financial advisor to actually take you through how to deal with the environment we're in, not what it looked like for the last 100 years, and how to prepare to live the lifestyle you want in the end. And obviously, you don't do interviews for the sake of just talking. You do them to meet clients and to allow people to get to know who you are and how you think, so they can call up a smart guy and ask for help. And so to that point, your website, singularprivatewealth.com, Heath Beam, the proprietor there, singularprivatewealth.com, and the telephone number, toll-free, Heath?
1-877-SINGULAR.
Great to have you again. Well, there you have it. I think he and I agreed on the fact that, as you just heard, that the market for housing could be going through a volatile time versus the economy, jobs, and the stock market.
Right.
While there is volatility, could actually be a bellwether, be doing great while one's doing horrible. And that's kind of unprecedented.
It looks very stable on paper, but then you get out into the real world. I mean, also in housing, we see this every winter. Everybody slows down. Nobody wants to make any changes during this time through the first of the year. So you have a lot of sellers who are on edge. Last spring they saw their neighbors get twice as much what their homes were worth, and now they're not understanding why nobody is showing their properties, nobody's calling. Some of these overpriced properties, we were talking about this last night, Bryan, if you have properties that are not brand spanking new with gray walls, updated exteriors, just the latest and greatest fixtures, and by the way, brass is coming back. I'm letting you know that now.
I don't know.
If they're just regular 2005 homes, they're considered outdated already.
Yeah, and to that point, of course, you were being hyperbolic when you said they got double last time, but they did get – we're seeing some scenarios where houses seem to be selling, I don't know, I'll make up numbers here, for $350 in March, when there was this real crunch. Lots of buyers, lower interest rates, and very little inventory. Now those not same exact homes, but similar homes are now selling for $299 and kind of slow. It almost looks like this huge gap between where it was and where it is. And I think what really happened is there are some people between about February and May who just literally way overpaid. And and those prices never concreted. And so what you have to do to figure out how to price a home right now, and what your home value is look back to about a year ago, maybe even 14 months ago, and say, what would this home have sold for based on the previous 6 months at that time? And we seem to have erased any gains that have occurred this year already in the course of 90 days. The gains in housing prices in Atlanta, in my opinion, based on the data, the real data, it's gone. It's non-existent. We've had a lot of gain in value this year, but in terms of what's going to be closing going forward December through February, we're going to see those price gains virtually erased.
I want you just to look back, though. Think back to March, April, where we had no inventory. So if you have no homes on the market and you get an agent who says, hey, seller, listen, if you put this on right now, you're going to sell it because nothing else is available, and you don't have to do anything to it, and you can get top dollar because you're going to have that many buyers looking, so of course they're going to get top price. Then you get these people, the Johnny-come-latelys in August, September, October, who they're like, oh, my neighbor just sold for more money. I'm not going to do anything to my property. I'm going to try to get the exact same amount, and it's not happening. So then you have so much inventory of just bleh homes, and when they go back to try to, you have the buyers coming through, and they want like this top dollar. It's not happening.
Well, and the thing that a lot of people, and we're dealing with this with sellers because we get a ton of calls from the marketing we do, the radio show, what have you, with people that have mistakenly listed with an incompetent agent that's set on the market for 6 months and they haven't sold the property. And then they call us and ask us what to do. And at one point, we would take the listings with some bit of gray area. Now we're kind of black and white. If you do these things, we'll be willing to list a home. If you're not, then you're just going to end up disliking us in 60 days. So we're not willing to take that anymore, which is the exact same thing you and I have done for a decade, investing in real estate.
Right.
I told an agent the other day, I said, I may be preaching to the choir. She's a lovely lady, called me up, caught me on the phone. But I pointed out to her, I said, listen, your house is nice. It's blue. It's actually nicer than my similar listing in a lot of ways, but the color scheme is really killing it, and your price is fine. Sellers want to put their homes on the market this day and age.
And not do anything.
They don't want to do anything. Maybe clean it up a little. Cleaning the home and removing clutter is not preparing your home for the market. When you want to sell a property, we have a condo in Buckhead that we renovated extensively in 2015 based upon our tastes, based upon, the previous decade's renovation, which has changed.
It's already outdated.
It's dated.
I mean, already.
And the bathroom itself was $50,000.
Right.
All right. So now if we were going to sell that property, we would need to spend another $50 to make
to
75.
put it back. Sure.
Because if we don't spend the $50, we're going to lose $75. That's a $150,000 swing for a $50,000 investment.
Oh my gosh, we're just not moving.
You have to do that.
I just have one or two sellers that are just so stubborn, and after you go through that fourth agent and expect some sort of a unicorn to show up, I mean, you can't keep doing the same thing and expecting that some other agent's going to bring you another offer. It just doesn't work that way.
You got to make the changes. You got to make the investment. That's it for this weekend. TheRealEstateExperts.com. Thank you for listening.